Friends, in today's video, we will discuss Motilal Oswal Midcap Fund. Motilal Oswal Midcap Fund has experienced a sharp decline in the past 6 months, along with the market. Particularly, if we look at its YTD returns, this decline is quite significant in comparison to the category. NAV of this fund has fallen more. Usually, this fund outperforms its category averages in every time frame, be it 1 year, 3 year, 5 year, or 10 years. Check any time frame, and it has consistently outperformed the category averages and generated decent returns for its investors, both in the short term as well as in long term. But if we look at its near term performance, especially since the market has started to decline in the last 6 months, the performance of this fund has been quite disappointing. This fund has not been able to match the category averages and is underperforming them. In such a situation, it is natural for its investors to wonder whether this fund ever stop falling. Will it ever come close to the category averages again and start outperforming them? And if yes, then when? As if we look at the last 6 months when the market has been correcting, the category has seen a decline of 17%, whereas the Motilal Oswal Midcap Fund has declined by 19%, slightly more than the category, almost equal to its category. But if you look at the YTD fall from January 1st to date, there is a significant underperformance. In this period, while the category has fallen by 15%, the Motilal Oswal Midcap Fund has dropped by 23%, which means it has declined 8% more than its category average. This is a huge underperformance, and it is natural for its investors to be concerned. In this context, it is important to understand that the Motilal Oswal Midcap Fund follows an aggressive investment strategy. Such funds, when the market declines, tend to fall more than the market. However, silver lining is that when the market starts recovering, it may be today, it may be after 6 months, or even after a year. These funds also tend to outperform the market and the category averages, generating excellent returns for its investors. This is proven by its past performance, where it has outperformed its category across 1 year, 3 year, 5 year, and 10 year time horizons. So, it cannot be a random reason or a coincidence that a fund which has consistently performed so well in every time frame has suddenly started to underperform this much. The core reason is that fund's aggressive investment style coupled with market decline during this time period. Whenever market falls, this kind of performance is expected from a fund which follows aggressive investment strategy. However, when markets stage a recovery, this kind of funds are likely to recover their losses fast and again start outperforming its category. Why does this happen? Because funds that follow an aggressive investment strategy like the Motilal Oswal Midcap Fund have a very concentrated portfolio, and this concentration is what leads them to outperform during bull runs, but also leads to underperformance during negative market phases like now. Currently, if we look at the Motilal Oswal Midcap Fund's portfolio, it holds only 30 stocks. Until recently, it used to hold only 24 stocks. It has increased diversification slightly, and now it holds 30 stocks, whereas the category average is 77. So it still has a highly concentrated portfolio. Further, fund's portfolio is not only highly concentrated, but also it is significantly overweight in some of those stocks. For example, out of 30 stocks, 55% of its portfolio is invested in just 10 stocks. So even if a few of them, say 2, 3 or 4 underperform compared to the market, for instance, how Kalyan Jewellers stock has recently underperformed, then obviously the NAV of this fund is likely to hit hard. However, on the other hand, this same portfolio concentration is what ultimately drives the fund's outperformance, due to which it has delivered decent returns in the past by outperforming the category averages across all time horizons. And there is a high probability that when the next bull run starts, this fund will again start outperforming its peer and the category averages. If you analyze this fund's portfolio more deeply, you will notice that the average market cap of its portfolio is 4,100 crores, whereas the category average is at 18,200 crores. This means that this fund is investing in smaller market cap companies, nearly 1/4 of the category average. Although this fund invests in mid-cap companies, but within the mid-cap space, it chooses companies that have much smaller market caps And as you are already aware, the smaller the market cap of a company, more volatility its shares tend to have. This means that when the market falls, these stocks fall more. But when the market recovers, these are the same stocks that bounce back quickly and start hitting new all-time highs. Because of the lower market cap, it is natural for them to experience sharp ups and downs very quickly. Even a small amount of buying can drive their prices up rapidly. And if they meet with a slightly negative market trend, they can fall just as quickly. These are some of the reasons why the Motilal Oswal Midcap Fund has shown poor short-term performance. However, it is an established fund that has consistently generated good returns for its investors. So, if you want to stay invested in this fund, you need to understand that funds with aggressive investment strategies have higher volatility. If you have chosen Motilal Oswal Midcap Fund for investment, then in the long term, it holds the potential to give you decent returns. But for that, you must be prepared to experience short-term volatility. As far as making a new investment decision in this fund is concerned, since the market has declined quite a bit, its NAV has come down significantly. This could be a good time to invest because this is the characteristic of volatile funds. They often give you opportunities to invest at lower NAVs through lump sum investments. Investors should take advantage of such opportunities, especially when there is a sharp fall in the market and particularly in aggressive funds where the NAV has declined significantly. One should invest in such funds at that time rather than booking losses and exiting. This video is only for educational purposes and is not an investment advice or recommendation. Always conduct your own research or consult a financial advisor before making any investment decisions.